Use this trading confluence to find more setups and boost your overall win rate. All right, this is my favorite trading confluence. It's one that I use 99% of the time. It's actually very rare that I enter a trade without this confluence. And just a heads up, this isn't anything ICT, SMC related. A lot of the trading confluences and strategies that you see are very subjective, meaning there's multiple different ways to view the certain confluence or multiple different ways to draw a support level, for example. This is completely different, all right? This is completely objective. There's only one way to use this confluence. If you're struggling with your trading strategy or you're just looking to boost your overall win rate and you aren't currently using this, make sure to watch this video until the very end. So I'm talking about the golden pocket Fibonacci levels. Now, I'm sure some of you guys have heard about these, maybe use these in your trading already. Make sure to watch this video till the end. Like I said, I'm going to go through it in a little bit more detail than I normally do. So this is a built-in trading view tool, right? So this is 100% free to use. And like I said, it's an objective confluence, not subjective. This means there's only one way to draw these levels on your chart, removing any margin of error. Like I said, a lot of these confluences and strategy videos that you see on YouTube, there's many different ways you can use it. So that's not objective, right? That's subjective. With this, there is only one way to use the golden pocket fib. There's only one way to draw a Fibonacci retracement. It removes a lot of the guesswork and removes a lot of the emotion. So this is why I love the golden pocket fib, which by the way consists of, like I said, the 0.65 and the 0.618 Fibonacci retracement levels. Now let's get right into what these levels actually are and why this works not only in trading, but actually in everything in life. So this is referred to as the golden ratio. So this is a unique ratio that can be used to describe the proportions of everything from nature's smallest building blocks, such as atoms, to the most advanced patterns in the universe, right? So you can read more about it here. But this is essentially derived from the Fibonacci numbers, which is a series of numbers where each entry is the sum of the two preceding entries. All right, so this is used in a lot of mathematics. You see it in the universe, you see it in nature, you see it in plants, you see it in our thumbprints, you see it in galaxies. You actually see it even with the structure of our face. So not only does this relate to trading, but also the golden ratio or these certain Fibonacci numbers are seen in the universe as well. So very interesting. Again, this doesn't make it a great trading confluence necessarily, but I do find it interesting how there is a carryover on the charts to the universe, right? And to the reality that we're living in. So I found that very interesting. But let's get right into it in terms of trading, right? In a TA perspective. So TA is technical analysis. So the reason that this is a good entry level is because one, it's below the 50% level of a range, meaning you are buying into discount. Anytime you trade using the golden pocket, regardless of what other confluences you have, you are by nature entering in a discount zone, entering below the 50% range. So when you are looking to enter a position in a certain trend, whether that's an uptrend or a downtrend, you obviously want to wait for a retracement, and that golden pocket retracement is going to be your most optimal entry. The second reason this works so well is that other people are watching the golden pocket and they're going to enter at the golden pocket as well. So if everyone is watching the same thing on a chart, watching the exact same level, drawing the exact same level, and they all have their buy orders there, that is going to drive the price up, right? Because there's going to be so many orders in one area that it will just inherently have a reaction at that level. And of course, you want to use this in Confluence with key horizontal levels, trend, divergences I like to use as well, and other things which I'll get into in a second. All right, so how do you use the golden pocket fib? Well, there are two main scenarios when I use a golden pocket in my trading, and one main scenario where I never use a golden pocket. So the two main scenarios where I do use a golden pocket is trend continuation, which is where price is making higher highs, higher lows. You want to wait for that retracement to the golden pocket. And then the reversal method, which is waiting for a sweep and reclaim of a level or a swing failure pattern into a bias flip. Now you need to see displacement for this as well. Again, if you're a little bit confused here, just keep watching. I'm going to get into all this in the next slides, but essentially you have the trend continuation and then you have the reversal method where you're buying very low. So this is going to be a little bit more difficult than the trend continuation, but usually offers a better risk to reward. When the market is ranging, avoid using the golden pocket. So this is the main scenario when I try not to use the golden pocket. Whenever we're in a clear range, price will usually balance between range highs and range lows, which means you won't see a reaction at this fib level. All right, so pardon my horrible handwriting here, but here are the two main scenarios in simple form, right? It's not going to be this simple on a chart. But we have the trend continuation and then the reversal. So the trend continuation is going to be, again, like I said, higher highs and higher lows. You're going to be entering at the golden pocket from that swing low to that swing high. If you don't know how to draw a golden pocket, I'll get into that as well. But for a long, you draw it from the swing low to the swing high. And for a short, you draw it from the swing high to the swing low. So again, you're entering a long because we're in an uptrend. You're going to enter at that golden pocket. Ideally, you want some horizontal confluence as well, such as a breakout and retest of this resistance zone turned into support. So this would be an ideal long position when you're looking for a trend continuation long. And then we have the reversal long. So this is when we're in a downtrend, right? Seeing lower lows and lower highs. Ideally, this is going to be a high time frame support zone or a high time frame point of interest. You want to see a sweep of those lows, right? Or a swing failure pattern, breaking structure right here, right? Breaking structure with displacement. This is also called a bias flip to the upside. And that's when you want to get your fib tool, draw from swing low to swing high, and enter at the golden pocket. So here's an example of using the golden pocket to continue the trend. So this is on Ethereum on a slightly higher time frame, right? A 12-hour time frame. And you can see we have this very important demand zone, right? It was acting as resistance, resistance, support, support, support. This is a very key support level, right? And we can clearly see that the trend is making higher highs and higher lows. So again, we want to be longing into discount. So we're going to get our golden pocket fib from the swing low. Now you could say this is a swing low. This to me is a major swing low. So this is where I drew the fib from this swing low to the swing high, comes right down to that demand, to that golden pocket. Again, the golden pocket is overlapping that zone perfectly, and we bounce right from that level. You can put your stop loss below that zone, target the external liquidity as your first take profit. So beautiful, beautiful swing trade here using the trend continuation mode. And you can see, even if you go back a little bit further, if you were to just draw the fib on every move to the upside, so from here to here, golden pocket entry, here to here, golden pocket entry, here to here, golden pocket entry. So pretty much every time in this uptrend, you could have just longed at the golden pocket. All right, let's look at another example. This is of the reversal example. So if you look left, you can't really see from the screenshot, but we are seeing lower lows and lower highs. Now this marked zone I have is a very important higher time frame point of interest. This is a higher time frame support zone. So again, for the reversal, you want to be waiting for a swing failure pattern. So a sweep of these lows, right? A sweep of these lows right at our higher time frame point of interest. Wait for a bias flip to the upside with displacement, right? You can clearly see here, we also had some bullish divergence on the oscillator. We break that previous high, creating a higher high. That's when we draw the golden pocket from the swing low to the swing high, comes down right into our golden pocket. You can even have a DCA order at the 0.786 if you want. Stop loss below that low, and you want to be targeting the external liquidity, so the higher time frame swing points as your take profit. So using the golden pocket in this manner will oftentimes result in a much larger risk to reward because you're buying from such a discounted zone, right? You're buying from such a discounted zone, and then you're longing it all the way up to those external swing points, right? Those higher time frame swing points. Here's when I would not use the golden pocket fib, right? In any sort of ranging market, this is the best example I could think of right off the top of my head, right? Which is Bitcoin on a daily time frame. You can see we have these pretty clear range highs and range lows. So in this case, when you're in a clear ranging market, you want to be buying at the range lows and selling at the range highs. You don't really want to be longing any golden pocket. Now, granted, right, you still could use a golden pocket on a lower time frame. For example, we have a beautiful reversal strategy here, right, where we have a sweep of those lows, right, displacement to the upside, retrace into that golden pocket. I can tell without even pulling my golden pocket tool out that this bounced right from the golden pocket, and you would target those external liquidity levels as take profit. So that was a beautiful trade using the golden pocket. But again, it's just not ideal to use it in a ranging market. I like to trade mainly swing failure patterns. All right, now let's look at some live examples. So these setups have not played out yet. So in case you're thinking, Matt, you're just cherry picking certain setups, no, this is going to be using the golden pocket to continue the trend, right? Now, just for more proof that this works, if we actually take our golden pocket tool all the way from this major swing low to the swing high, we come right to that golden pocket. And again, right, if we drop from the swing low to the swing high, again, we come right to that golden pocket. All right, so this is a current example that I'm looking at to continue the trend. This kind of uses a mix of the reversal as well because we did sweep these lows. We are at a major discount level, but I'm looking to continue this trend to the upside, right? Because on a macro time frame, we are seeing higher highs and higher lows. Here, I'm including some other confluences like a trend line breakout. This is not required, but I see that we've displaced to the upside. We are retesting this major support zone here, right? Used to be resistance, resistance, flipped to support, failed resistance, and now we're looking to test this level as support. So we have a very key horizontal support zone right here, and we have our golden pocket overlapping that zone. I'm gonna be looking to long Pepe somewhere around here to those range highs to continue the trend. Here is using the reversal strategy. So I'm looking at WIF on a daily time frame. As you can see, we are in a macro downtrend, right? Lower lows and lower highs. But I'm actually looking to long from this golden pocket because we had swept these lows over here, right? These range lows, we had swept those lows, reclaimed those lows, right? So this is a valid swing failure pattern. And we had that bias flip right here, breaking structure to the upside with displacement. You know it's displacement because you have multiple candle closes above this level and you have fair value gaps. And that fair value gap happens to overlap our key support zone and our golden pocket fib. So all the confluences line up. I'm going to be looking to long somewhere around here on whiff, maybe even a DCA at the 786 fib, stop loss at these lows, targeting the high time frame swing points. So right here would be my first take profit, right? So huge risk to reward trading in this manner. All right, in conclusion, the golden pocket is a must-use tool in your trading. Just implementing this one confluence can drastically improve your win rate and give you more confidence in your trades, right? Very simple. Now, if you want an investment system that has been tested and proven to work over an amount of years, giving you perfect buying opportunities like I just showed you on Pepe at the bottoms of the market, as well as giving you all the confluences mentioned today, such as key horizontal levels, such as the auto golden pocket fib, keep reading, all right? This is Easy Algo. So this is my own trading algorithm that I've developed over the past 2.5 years. We've made it pretty much flawless at this point. This is actually a new update that should be out or almost out by the time this video goes out. As you can see, we have multi-time frame support and resistance zones. These are coded by algorithms. There is no guesswork in finding these levels. All you have to do is add your confluences together. We have these artificial intelligence buy signals, trend continuation buy signals, mild buy and sell reversal signals. Of course, we have the auto golden pocket also with a multi-time frame feature, and our momentum divergence oscillator, the Easy Oscillator, which also has buy and sell dots, does a great job of helping you find divergences, find momentum imbalances in the market, and just another great added confluence. Like I said, Easy Algo is our real-time, non-lag trading algorithm, removing the guesswork. Follow a system that is built on algorithms, not emotion. Along with the algorithm, you'll get access to daily market analysis and setups, trade signals and alerts, and a community of like-minded traders. If you've watched to the end of this video, use code ALGO30 for 30% off for your first month. All right, make sure to click the first link in the description below. I'm also going to leave the link to this entire presentation down below so you can go back and refer to this whenever you need. That's it for me. Hope you guys enjoyed. Make sure to leave a thumbs up if you did, and I'll see you guys next video.